In this example, I will be showing you how the compound interest works with the S&P 500 versus the IUL and the caps and floors that come with the IUL to protect the value of the money in your policy. So as you see, this example is starting off with a $100,000 balance. In 1999, there was a 19.53% return, and you gained $19,530. But with the IUL, it capped out at 11.5%, giving you $11,500 in return. But as you see, in year 2000, there was a negative 10.14%, and you see how it affected the money that you previously gained in the last year. But with the IUL, there was a floor of a 0%, so you didn't lose the value of your money. And this is the added bonus that comes with investing into the IUL and allowing you to become your own bank with a more safer and secure method. And over the years, you see how the compound interest works with each policy, and you see that at the end of 2018, you have over $140,000 more with the IUL versus with the stocks. In this example, it is showing you the caps and floors that come with this policy to protect the value of your investment with this IUL example. As you see, with the S&P 500, these are the lows and highs throughout the year of 2003 all the way to 2022. And the average with the S&P 500 gave you a 7.54% return throughout those years. The two that we will pay attention to will be this index and also the Barclays index. And as you see, the average return throughout the years for the S&P 500 is an 8.08% return and a 9.48% return. This is an example of an illustration for an IUL for a male, age 1, giving you a face amount or death benefit of $154,763 with a $100 monthly payment, giving you additional riders to protect your life, your health, and build your wealth. Now, although you do have to pay a $100 monthly payment, if you ever fall on hard times to keep the policy active, all you would have to do is pay $22.70 because this policy comes with a no-lapse premium guard. As stated previously, this is an example for a 1-year-old male with a face amount of $154,763 with a $100 monthly payment. There are a couple of things that I want to point out to you. This column is showing you the age. This one is showing you the year of the policy. The plan premium outlay is showing you how much you will be putting into this policy per year So 100 times 12 is how they got the value of $1,200. Anything under this column, withdrawals and loans, is what will be paid out to you as a loan for you to become your own bank. Now we will be paying attention to this column here with the interest of 6.54% return. And there are two columns that you want to pay attention to: the account value and the net death benefit. At age 11, year 10 of the policy, you have paid $12,000 total throughout the years, and now you have a death benefit of $167,186, and you have access to become your own bank or take a loan against this policy of $12,423. Now, if we go to age 31, year 30 of the policy, you have paid a total of $36,000, and your death benefit has increased to $246,625, giving you access to $91,862. Typically, with an IUL policy, it is best to invest into this for at least 20 years to give you the maximum amount of value and return for this policy. But with this particular example, we have this one structured out to pay into this until age 65. Now, throughout the lifetime of this IUL policy, you have paid a total of $76,800. And your net death benefit has increased to $1,351,882, giving you access to become your own bank with a value of $1,108,100. Now, with the withdrawals and loans, with this example, it is structured to pay out between the ages of 66 to age 90, giving you a payout of $107,124 every single year. And as you see, within the first year, you have received more than what you have actually put into this policy. Now, in this example, if this individual lives until age 90, they would have received $2,678,088 throughout their lifetime, and still have $374,561 to leave as a death benefit to your family. Now, this is how you can become your own bank and leave a legacy of generational wealth to not only protect your life, your health, but build your wealth also.